What up guys, Nakamoto Crypto here. So 2 years ago there's a guy who created a model that predicted the price of Bitcoin would hit $288,000 by the end of this bull cycle. But with the price of Bitcoin recently dropping below $30,000, is this model still valid? Let's find out. Stay tuned. Like and subscribe. Let's get to it. So this guy's name is the investor Plan B. So 2 years ago, back in 2019, he was reading a book called The Bitcoin Standard, written by a gentleman by the name of Saifedean Al-Amun. This is the most famous Bitcoin book ever written. Inspired by this, he created a model called the stock-to-flow model. The model was popularized by Plan B back in 2019 on Twitter. It is considered to be one of the leading quantitative valuation for the first ever scarce digital currency, Bitcoin. The model presumes that the scarcity of certain assets or commodities drives their prices upwards. So in a nutshell, the stock-to-flow model is an attempt to price Bitcoin in a way similar to scarce commodities like gold, silver, and etc. So since Bitcoin has a maximum supply of only 21 million coins, considering the time and energy intensive mining process, there is only a certain number of new Bitcoin that can come into circulation in a time frame. Therefore, the premium currency has fit right into this model until now. The model has been working for the past 11 years, as this guy went all the way back to 2009 to track the price of Bitcoin based on this stock-to-flow model, and it has been right on track. It might go up, it might go way down, but it always comes back to the same stock-to-flow line based on supply and demand economics and the Bitcoin halvings every 4 years. But recently people have started questioning this model. Johnny Liu, the CEO of KuCoin Global, has recently stated that the stock-to-flow model creator tried to predict continuously surging Bitcoin price based on its scarce nature, similar to gold in that it also has a high stock-to-flow ratio. Therefore, this hypothesis is that as Bitcoin's stock-to-flow rises, so will the price of Bitcoin. He goes on to say that models like these are usually built on historical data, and that while some periodic trends can help identify the general direction of the market, specific trends can often be difficult to track in advance. So as of right now, according to the stock-to-flow model, Bitcoin's price is supposed to be sitting at $88,500, which is nearly 3 times as high as its current price below $30,000 right now. So in fact, earlier this year, Plan B suggested that Bitcoin could hit $450,000 by the end of this year, in the best case scenario. He also stated at the same time that worst case scenario, Bitcoin is going as high as $135,000 per single BTC by the end of this year. Furthermore, the stock-to-flow model predicts that Bitcoin is expected to hit in the future $1 million per single BTC by July of 2025. This, however, is a few years away. In a Plan B Twitter poll back on June the 21st, which is just last month, 41% of the respondents thought that Bitcoin would remain under 100K this year. This is compared to the 16% that believed the same thing back in March of this year, when Bitcoin was trading at around $55,000. Plan B went on to say that the Bitcoin price deviating from the stock-to-flow model is even making him feel a bit uneasy. So, does he trust his own model? The model uses the stock-to-flow ratio to value the price of Bitcoin. This ratio is defined by the current number of Bitcoin in circulation at a given time and the incoming flow or newly mined Bitcoin. As evident in the chart describing the model, historically Bitcoin has traced the price estimates in a fairly accurate fashion at most times. As pointed out by Lex Moskovsky, the chief executive officer of Moskovsky Capital, the negative stock-to-flow deflection The ratio between the market price of Bitcoin and the stock to flow ratio is now the highest it has ever been in the history of BTC. So he went on to say, for the people who believe in the stock to flow model, this is a great time to buy Bitcoin, as this price drop could be perceived as an unexpected dip. Lennox Lai, the director of financial markets at OKEX, stated that despite its limited predictions, the stock to flow model only had limited power over the Bitcoin price because it assumes the production of Bitcoin will be limited. So while its simplicity makes the concept easier to understand, but the demand back in the time is a different story to now, in which the demand has directed influence on its intrinsic value. For example, one of the major changes in the past year for Bitcoin and the cryptocurrency market as a whole is the highest rates of institutional adoption and also retail adoption that have drastically increased since March of 2019. Another important factor in this demand and adoption dynamic is the C-19 pandemic that has plagued the world for more than 19 months now. Lai elaborated more on this by stating that the pandemic has probably also accelerated the adoption of Bitcoin, as the USD supply has inflated massively over the past year. They printed more money, pushing investors to seek alternative assets to place their money in as hedges against this inevitable inflation coming in. We also see daily analysis from well-respected firms and institutions predicting that Bitcoin is way undervalued. Yes, the mask effect, combined with various other factors such as the mainstream popularity of NFTs, have also played a large role in raising awareness about cryptocurrencies and blockchain technology in general. This changing scenario in the cryptocurrency market, as well as the emerging projects and altcoins on the market with diversified application scenarios, will distract investor attention and diversify their existing investment portfolios, thus continuously fluctuating the Bitcoin market. This change is evident in the fact that since the beginning of this year, Bitcoin's dominance as the #1 cryptocurrency has fallen from over 60% to currently around 46.3%, signifying a growing altcoin sector. Ethereum is catching up. In a recent example of the shift in demand and adoption dynamics since the inception of the stock to flow model, the Grayscale Bitcoin Trust Fund, GBTC, recently underwent several shares unlocking across July, with the biggest being on July the 18th. This expiry further increased the continual downwards pressure on Bitcoin, causing it to drop further to trading around $30,500 on July 19th and currently under 30k. In the past, when the stock to flow model initially became prevalent, there wasn't no institutional demand that could heavily impact the market in a short amount of time. So while the stock to flow model is one of the most widely known quantitative models that predicts the price of Bitcoin in the short term, there are several other models that are often used on the price of BTC. Daniel Bernardi, the founder of PHI Token Project and CEO of Diamond Partners Limited, has explored some of these models in a recent paper. Daniel evaluated the inadequacies of the Bitcoin stock to flow model, stating that it is not enough to consider the scarcity to predict the fair value price of an asset, because of course it has to be supported by the demand. For example, my mom can draw some art, but if no one wants to purchase this art, the value is zero despite the scarcity of that art. So what does Bernardi propose? He prefers the rate of adoption model, which he explores in his paper. He states that according to this rate of adoption model, the fair price of Bitcoin can be around $60,000 right now, but no more than that. This price estimate is based on the actual users of Bitcoin and the wallets that are currently being created. He went on to explain the probability of Plan B's stock to flow model actually coming into fruition this year. Of course, anything can happen, But from his point of view, there is less than 20% probability based on the Monte Carlo simulations that the Bitcoin price will reach a value greater than $100,000 in 2021. With that being said, it is important to remember that Bitcoin was exchanging hands at $18,000 for a few days briefly in March of 2017 and went on straight to trade at $64,000 just 4 years later in March of 2021. There are not many assets in the financial markets that have witnessed gains at these levels within such a short time span. So we have to consider that only after 6 months that the Bitcoin price hits a value greater than $30,000, we are now tempted to consider that Bitcoin is undervalued, but it is not. It's just the fair value average price of BTC based on our rate of adoption model. So in conclusion, fair value or not, Bitcoin seems to be in a period of turmoil, more often than not facing downward pressure on the token since the flash crash of Black Wednesday back in May. However, positive institutional news keeps on flooding in. Most recently, Grayscale CEO Michael Sonnenschein stated that Grayscale is 100% committed to turn GBTC into a Bitcoin exchange traded fund. So institutional demand is still increasing despite the price of Bitcoin dropping. This is due to an OTC purchase, over the counter. They don't buy straight from the exchanges, they purchase it under the table over the counter to avoid affecting the price. So what are your thoughts on the stock to flow model still predicting that Bitcoin could hit $288,000 by the end of this bull cycle? Let us know in the comment section below. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto and I'm out.